Larry Hatheway, he's chief economist at UBS Investment Bank. Larry, thanks very much indeed for joining us. Now, what would be the impact of a, let's say, 15% correction in the Chinese property market?
Well, I think at this stage it probably would represent bad news. Folks that I speak to are concerned about a Chinese slowdown. There's a significant minority of observers who believe that actually a harder landing may be possible in China. So that sort of a move would reinforce those fears. Having said that, that really isn't our base case. We don't think that there's going to be a hard landing here in the property market. And quite frankly, we think that the economy will be bottoming out fairly soon.
Well, the central bank, of course, has a lot of scope to actually restrict, or should I say, ease monetary conditions. So that's probably the reason why.
It certainly is playing a role, but the interesting thing is that having done a marginal easing so far, that is a cut in reserve requirements, the interesting thing to note was the data that came out over this past weekend, which showed that money and credit growth, if anything, are showing some modest signs of a rebound already. Deposits into the banking system are robust, and that gives the banks the fuel to increase their lending, and that seems to be what's happening. It isn't necessarily a powerful new form of stimulus, but it is something that's likely to provide some stability and probably make the naysayers a little bit concerned that their views are probably exaggerated.
Larry, you're there in Shanghai at that conference. I mean, you're talking to a lot of people. Give me an idea of what the general mood is like, you know, what the main concerns are. What are people talking about there when you're having your chats with them?
Well, I think a lot of folks are concerned that 2012 is going to be essentially a repeat of 2011, namely one of still very high market uncertainty. And the primary thing that people are worried about is actually Europe rather than China itself. The Eurozone crisis, as we all know, remains unresolved. And we seemingly lurch from one mini-crisis to another without any sort of general sense of resolution. And that, I think, has dominated the discussion here at this conference. Of course, China, the United States, and some other topics have played a role in the discussions here, but Europe is really topic number one.
Of course, we had Angela Merkel and Nicolas Sarkozy talking, and, you know, they came up with this transaction tax, the so-called Tobin tax here. Now, that's been touted about and floated for a while now. And if Europe did this unilaterally, I mean, would it actually make any difference?
Well, I don't think they really can do it unilaterally, at least not in a way that would be significant. When I say that, I mean without the participation of the UK, where London, of course, is the single largest capital market within that time zone. History suggests to us, for example, stamp duties on equities, that when those sorts of taxes are increased above certain threshold levels, the activity simply migrates from the high tax jurisdiction to some other financial center. So without London's participation, I suspect this is a more symbolic move than something that is going to be meaningful. And indeed, to effectively impose a Tobin tax, it would really have to be done on a global basis. And that seems unlikely.
Well, you know, the concern about Europe, got a lot of, we've still got many bond deals, you know, at 7%, and for the likes of Italy and various other nations. I mean, Greece, it's just, of course, it's in the stratosphere. Now, what needs to be done? I mean, is there just not enough money in the pie right now? Because it seems like everything is being done in a form of disaster management. It's all done too little, too late, it would seem.
Yeah, I think we have to recognize that Europe and European policymakers made a very poor decision last year in imposing the PSI on, that is, that private sector involvement in a debt restructuring on Greece. It is necessary for Greece to restructure, don't get me wrong, but what it did was it made the rest of the credits, the bonds in places like Italy or Spain appear now to be credits as opposed to risk-free assets. And therefore, the efforts of the ECB recently, for example, its 3-year tenor, which many had hoped would fund bond purchases by banks, have not had that effect because the banks are treating those particular bonds as potential credits. And bear in mind that the regulatory authorities have told them that they also have to reserve potentially against losses in those bond markets. So in changing, let's say, government bond yields into something that has a credit risk premium, you've reduced the appetite amongst investors, including banks, to hold those securities. And therefore, it does seem to me that at the end of the day, either the ECB has to step up directly through its SMP program and purchase bonds if we're going to bring down some of those elevated risk premiums, or alternatively, Europe has to go to a fiscally integrated model with a common bond issuance. Unfortunately, neither of those steps seems likely at this juncture.
Yeah, and at the same time, I mean, do you buy the story about the US turnaround taking place? Does economic growth actually have legs, or do you think it'll peter out through the course of this year?
I think the good news is that the U.S. economy is extraordinarily resilient. Think back to the shocks that arrived in 2011, Arab Spring, elevated oil prices, the fiscal folly of the United States in the middle of the year, the Eurozone crisis. Through that, the U.S. did slow. It had its soft patch, but it's emerging now stronger in the second half of the year. And the sort of untold story in the United States is that a lot of the adjustments in the deleveraging process are very well advanced. House prices are likely to stabilize later this year. Housing activity is already beginning to pick up from a very low base. The amount of money that households have to set aside to service debt is back to 10 or 12-year lows in the United States. That gives them extra purchasing power. And, of course, the labor market is showing signs of health. I do think that the U.S. is going to continue to stage this modest recovery. It's disappointing. We'd love for it to be stronger and to generate more jobs. But I do think that the U.S. has proven to be resilient from external shocks. And only in the event of a major financial crisis emanating from Europe do I believe that the U.S. recovery would be derailed. I'm quite confident that we're going to see growth in 2012 superior to that of 2011 in the United States.
Larry, nice one. Have a good conference there. Larry Hatheway there from UBS.